All right, let's get right into it. There's a common idea out there that VAT in the UAE gets slapped onto absolutely everything, but that's actually not true. VAT is a pretty specific tax, and it only kicks in when a deal checks off a very precise list of boxes. So in this explainer, we're going to break down exactly when you need to charge it.
So this is the million-dollar question for any business owner, right? You make a sale, you offer a service, and you're left wondering, do I add that 5%? The thing is, the answer isn't always a simple yes, and getting it wrong, well, that can really sting. But don't worry, we're about to solve that puzzle for you. And here it is. This is the single most important idea you need to get your head around. It's the golden rule of UAE VAT. You only, and I mean only, charge VAT when you've made what the law calls a taxable supply. So obviously the next question is, what on earth is a taxable supply? Well, it all boils down to a really simple 4-part test. For any transaction to count as a taxable supply, it has to meet 4 very specific conditions. Not 2 or 3 of them, it has to be all 4. Think of it like a checklist. So, here they are. First, you've got to supply either goods or services. Second, you have to get paid for it in some way. That's called consideration. Third, the sale has to be made by a taxable person. And finally, number 4, it needs to be done as part of your business. If even one of these is missing, then VAT probably doesn't apply. Okay, let's dig into each one. First up, this one's pretty straightforward. A supply is either goods, physical stuff you can actually touch, or services, which is basically everything else. We're talking about consulting, design work, giving advice, you name it. It seems simple, I know, but trust me, this little distinction becomes super important down the line. All right, on to our second condition, consideration. It sounds a bit formal, doesn't it? But really, it's just a fancy legal term for asking a very basic question. Did you get something in return? Exactly. Consideration is just anything you receive for the goods or services you provided. Now, most of the time, that's going to be money, but it doesn't have to be. It could be a trade, swapping your services for someone else's. The key takeaway is if nothing of value is exchanged, there's no consideration, which means no taxable supply. Simple as that. So here's a handy little tip for you. You know how when you buy something in a shop here, the price usually already includes the VAT? Well, if you ever need to figure out exactly how much of that total price is the tax, you just multiply the total price by 1/21. A neat little shortcut. Okay, on to condition number 3, and folks, this one is absolutely crucial. Just because a transaction could be taxable, it doesn't mean just anyone can charge VAT. That right, and really that obligation, belongs only to what's called a taxable person. So, who is a taxable person? It's actually quite simple. It's any person or company who is either already registered for VAT with the government or is legally required to be registered, usually because their sales have hit a certain level. And just to be clear, if you're required to register, it is definitely not optional. And we're not just talking about massive corporations here, not at all. This applies across the board. We're talking about companies, for sure, but also freelancers, sole traders, basically any individual who is running a business activity. If that sounds like you, then this condition is one you have to pay attention to. And that leads us perfectly into our 4th and final condition. The supply has to be made in the course of business. This is what draws the line between your professional work and, your personal life, like selling your old car or some furniture you don't want anymore. So what counts as a business activity in the eyes of the tax authority? Well, they're looking for these 3 main things. Is the activity regular? Is it independent, meaning you're not doing it as someone's employee? And is it ongoing? Things like offering consulting services or running a shop clearly tick all these boxes. And that's the flip side of the coin. Selling a personal item to a friend or having a one-time garage sale, that's generally not seen as a business supply. So even if you got paid for it, you wouldn't charge VAT because it fails this final test. Okay, so let's say you've gone through the whole checklist. You've confirmed you have a taxable supply made by a taxable person in the course of business. You've ticked all 4 boxes. The very last step is to make sure you apply the correct VAT rate. Now, for most things, it's going to be the standard 5%. But then you have these other 2 categories, 0 rated and exempt. You might be thinking, wait, 0% and exempt, isn't that the same thing for my customer? And you're right, the customer pays no VAT in either case. But for your business, the difference is huge. For zero-rated supplies, you can still claim back the VAT you paid on your own business costs. For exempt supplies, you can't, and that can have a massive impact on your bottom line.
Phew, we've covered a lot of ground. We've talked about the four conditions, who can charge VAT, and the different rates. So let's pull all of that together into one final, simple checklist that you can run through in your head for any transaction.
So, you only pull the trigger and charge VAT when all these boxes are ticked. 1. Do you have a taxable supply, where all four of our conditions are met? 2. Is the supplier, you or your company, a taxable person? And 3. Are you applying the correct rate? Get these 3 right, and you're golden.
And look, this really matters. This isn't just some boring tax theory. Getting this stuff right is what prevents those heart-stopping letters with penalties and fines. Honestly, understanding this framework is absolutely essential. It's what protects you from making some very, very costly mistakes. So, I'll leave you with this question. The next time you're about to make a sale or send an invoice, just pause for a second and ask yourself, is this a taxable supply? Now you actually have the framework to answer that question with confidence. And make sure you stick around, because in our next explainer, we're going to build on this and tackle the tricky rules for VAT on imports and the whole reverse charge mechanism.